it's a wonderful season we're seeing in Nigeria right now. We've seen the NSE index, like you said, gain 1.3% today, extending the rally we've seen since the AMCON bill was signed by the president. And so analysts generally and brokers are very upbeat. However, there's still some doubt as to if we'll see the extension of this rally into next week. So we'll just have to wait and see how that goes. But joining us to discuss a few bank results that have come in, we're obviously in the bank earnings season now, is Adetola Odukoya from Dunn Loren Merrifield. Thanks a lot, Tola, for coming on to the program.
Thank you.
Today we saw Sterling Bank release its half-year numbers. Very strong performance. We saw PBT up to 4.1 billion. And however, just like we've seen with most banks, we've seen gross earnings come down by 12%. What do you make of those results?
Well, this actually raises some key concerns for us. While it's very good that many of these banks, including Sterling, are back to profitability, the concern here is the fact that, for example, Sterling Bank's results were bolstered by the write-back, the net provisions write-back of about 1.6 billion naira. Last year, they obviously had tens of billions of naira written against profits before provisions for risk assets. So the write-backs for 1.6 billion this year obviously bolstered profitability for this year. But overall, the good side is that we're beginning to see our banks returning to profitability, which is a good sign.
Right, but you made a good point there about some concerns. We've seen that the loan book of banks generally are not growing as aggressively as one would like. First Bank, for instance, are forecasting that their loan book will be up maybe 15% this year compared to what we've seen in previous years. That's very, very small growth. So coming back to Sterling Bank anyway, how do you see, it's a very small player, obviously. Its net asset is 25 billion compared to 308 billion for First Bank. How do you see it competing going forward?
Well, going forward, some of these banks have to carve their own niches and equally have to look to explore some of the possibilities that the central bank is placing on the table. For example, this morning we understand there's a draft from the central bank looking at how we could actually start issuing merchant banking licenses, right, going back to where we were pre-consolidation in 2004. And also there's this proposal from the central bank also having banks to operate on a national level or regional level or on the continent with different capital base for each of those categories. So right, for some of these banks, it would be good for them to actually carve their own niche and look to probably be a regional bank or a national bank rather than trying to be all things to all men, which is what drove the sector to the collapse we saw in 2008. Yeah.
You know, interestingly, you made a point about going back to your niche. Sterling Bank has a history of being a merchant bank. Do you think they would go back into that?
Well, it's possible. Obviously, that decision would lie with the management. These days, the ability for banks to raise deposits, or the cheap deposits as the retail end of the market, has actually been a large attraction for banks in Nigeria, especially given the low penetration we have in Nigeria at present. So the attraction in the retail end actually will have banks probably look tend to look that far. But however, given the infrastructural deficit and the need for us to grow a debt side of our capital market and equally have a deeper equity market, actually presents another a plethora of opportunities also in the investment banking or merchant banking side of the banking sector. So all in all, I think overall Nigeria actually presents fantastic opportunities for discerning investors who can actually take hold of these opportunities.
Okay, so just on one word, will you buy Sterling with those numbers?
Yes, I would. I mean, looking at the banking sector generally, most of the banks, interestingly, most of the banks that were rescued by the central bank last year, of course, it doesn't include Sterling Bank, of course, actually trading at single-digit Ps compared to some of their peers, the larger banks, who have actually enjoyed so much rally recently and issued bonus shares, which is diluted and increased their price earnings ratio over the last 2 weeks. So some of these small banks actually could present value to investors.
Okay. Well, I said in one word, but you succeeded in extending it there. But anyway, let's come back to banking stocks in general. Are there any ones out there? We've seen bank stocks rally significantly this week, even from last week, obviously. Some have gained as much as 15%. Would you still buy, and which ones would you buy now?
Well, interestingly, there's some value in Skybank and a handful of others who are actually still trading at 2010 forward Ps of about 9-8 times. So all in all, we would look at Skybank and maybe GT Bank.